Hello everybody, I made it, and I have electricity, and I have internet, and I've got cell phone signal. Sorry about this morning, I spent 6 hours preparing this, got up at the crack of dawn, and then literally 1 minute, 1 minute before the stream, PG&E in San Francisco decided to pull the plug. Anyway, here I am, a different part of the world, but back again. Thank you all for coming. Thank you, Nick H and Crypto Katana, the big sword. I'm going to go run through this very quick, and I want to do it tonight because tomorrow it's not timely. This stuff has to be done fresh, and there's a lot of interesting news too. And I call this segment In the Money. Happy Friday, everybody. We'll talk about some of the money, and of course, anything I say is edutainment, never financial advice. Don't forget to subscribe. Unique content every single day. So let me see. Bitcoin still doing its Bitcoin thing, still hovering just shy of that 34K. ETH slightly outperforming too over the last 24 hours, and some of the tokens have been quite special. But let's talk about some of the big picture items that are going on right now. And this little chart from Glassnode is very, very important. And I keep on talking about this. Hey, Doggone and Pancake Panda and everybody out there, Gail and everybody else. But I've been talking about long-term holders and how they have the highest conviction. They are more convinced than ever before. Never before has so many Bitcoin been held long-term. Now it's at 15 million Bitcoin. You know, there's I think there's a guy called William Heston or something. They said, you can try pry this from my cold dead hands. And that's the way these long-term people think. Just turned off my phone, by the way. It was pinging all the time. But I want to walk you through this chart real quick. And here you can see that purple is the long-term holders, and they're showing this very impressive conviction. Not only now, but also during the bear. Nothing could shake their Bitcoin loose. And this indicates that more Bitcoin obviously has been held for longer periods of time than is being sold. The short-term holders only have about 4.2 million. We'll talk about how many of those are in loss too. But there's another factor in play right now. We all know the Bitcoin ETF is coming. It's going to be bonkers. Love BlackRock or hate BlackRock and the 8 or 9 or 10 other players. But this is another sign that things are taking place. Now, this is from K33 Research, and it looks at the CME traders and how they actually trade. And the point is, I always look at option action on Bybit and other exchanges, and I don't focus too much on CME, but I'm going to start now because when CME, simply put here on the left, when CME traders buy more Bitcoin futures contracts, the price of Bitcoin tends to go up in the following days. And this is because the CME traders, hey Dragon, the CME traders are betting that the price of Bitcoin will go up. So they are buying contracts to lock in their profits or make more profits. And the opposite's also true. When CME traders sell more Bitcoin futures contracts, it's bearish and the price of Bitcoin tends to go down. And this is because the CME traders are betting the price of Bitcoin will go down and they're selling their contracts to make money. An easy way to think about it is on the left, you can see the average return in black and the median return in blue. And that is when the CME traders buy Bitcoin futures contracts. And afterwards, after they buy the contracts, the price of Bitcoin goes up. And it's not magic. It's because they see the money, the institutional money going into the space. And on the right-hand side, CME traders sell the Bitcoin futures contracts and they think the price is going to go down. And it normally goes down a few days after they sell. So watch. I always say follow the money. Follow the options traders as well, especially when there's big piles of contracts being purchased. Now, speaking of piles of contracts, another bullish sign. And I always said, like back in summer 2023, it sounds like ages ago, but my target was kind of $35,000 to $42,000 for Bitcoin by Christmas this year, which is what, 10 weeks away or less? I don't even know. It's yeah, it's not very far away at all. But check this out. This is Deribit options action. $500 million worth of $40,000 strike price contracts were placed for Bitcoin to be priced at $40,000 by Christmas. Expiring, well, December 29th, 4 days after Christmas, 2 days before New Year's Eve. That is massive. That is $500 million bet that Bitcoin will be at 40 grand. And who knows if they're right or wrong, but somebody is extremely bullish. This also is another proof point. These options traders know the spot ETF is going to come. They know a lot of money is going to come in, and they know Bitcoin price is, in their opinion, going to go to $40,000. So, and that's not a big stretch from where we are today. In fact, it could go a lot higher, and they make a lot more money in their options contracts. We were at 34, we hit 35 a couple of times. Going from 35 to 40 is really not that much. So expect 40,000 by Christmas is what this data is telling you here. Now, in other news, hey Andy, I've got all the Australians today. They like this hour. And happy weekend for everybody in Australia, because it's Saturday. And everybody in New Zealand too. Big hugs to the whole team over there. Now, this is in what I call, in this time it's different news. Yes, it's very different. So if you look at this chart here, you got the price of Bitcoin going up. At the same time, the US 10-year yield is going up. Normally they go in opposite directions, but today that is not the case. And if you look at this, we had I'm going to talk tomorrow morning about strong GP data and what it means and how it's kind of very confusing. But the other thing, it's notable that Bitcoin is bucking its traditional trend of the past few years of interest rate sensitivity. When rates go up, Bitcoin should go down. But now they're both going up at the same time. So it's crazy. It shows you the institutional flow is very substantial into Bitcoin. So more positive news. And we always talk about things kind of being inversely correlated. Well, we had the biggest inverse correlation between the S&P 500 and Bitcoin as well, because stock markets got whacked. But I'm still very bullish up to year end. This is just earnings. Earnings have been quite morose all across the board. And despite this, the world saying GDP numbers are very strong, the earnings do not reflect that. Anyhow, let's look at this. This is the most divergent Bitcoin has been to the S&P since mid-2021 bull run. Okay, that's a good sign. And this is what's so unusual about this particular early bull, as I call it. Everything's happening much faster than before. And I've shared that, I think, on Tuesday in a chart where this bull run is higher and earlier than before. And Bitcoin did scratch its way to a new 17-month high again. And also the S&P 500 had a nasty 10% decline. So Bitcoin and its reliance on being correlated with equities is gone. And this is a typical recipe for bull market conditions. So good times here. All you need to know is the green is Bitcoin and the S&P 500 is that light blue teal. And they're going opposite to each other. Again, good stuff. Now, I didn't cover it yesterday because I was covering something else, but that IBTC, the ticker for iShares Bitcoin Trust, is back on the DCC website. So don't worry about that FUD. It disappeared. The site crashed. Everybody thought it was dead, but no, it's not. Everything is fine. So let's talk about the number of Bitcoin holders in profit, because this is the story today. It's in the money. Who's in the money? Hello, Freedom, and everybody out there. Thank you all for coming, and sorry for being so late today. It was a crazy, crazy day. Anyway, as you know, on this channel, we like numbers and math and Pareto efficiency. I've believed in Pareto efficiency my entire life, and I do a lot of things based on that. But coincidentally, Bitcoin is now Pareto efficient from the perspective of the number of holders who were in profit. 80%, well, 79.78%. I'm going to round up to 80% because it's bang on the nose. 80% of Bitcoin holders are now in profit. Only 20% are in loss, which is not bad. So that is very, very good. If you look at it in terms of addresses, it's about 39 million addresses are profitable and 8.7 million addresses are not. And a small percentage, 2%, are actually right at the money. No profit, no loss, but bang on the level. And opposite to that, I found this trend very interesting because not everybody is 80% in the profit. I was surprised to see that 81% of Cardano holders are in loss. And that is 719,000 addresses have profit and 3.62 million addresses are at a loss. So it's a complete opposite to Bitcoin. And again, it's a very unusual trend, but all is not lost. I've got some good news for the Cardano army. Coin Bureau came out and he gave his price predictions, and he believes Bitcoin, ETH, and Cardano could go as high as 120K, 15K, and $24 for the three assets respectively. I want to just focus in on $24 for Cardano. That's basically 100x from where we are now. And that would make Cardano a $1 trillion company. And remember, Tesla's about 600 billion. So Cardano would be nearly twice the size of Tesla. Do I believe that? No. But if Guy, with all due respect, if he's correct, can you imagine what Solana would do? Oh my goodness, that'd be nuts. So if I do believe, if hypothetically, if Cardano did go to $24, again, nearly 100x, something like Solana would do a lot more, would be 200, 300x, which would take it to somewhere crazy like $3,000 or $6,000, which is all crazy numbers. The numbers will be great in this bull market. 2024, 2025 are going to be awesome. There's no doubt about that. This time is very different, and a lot of money will come into the space. But don't hold your breath for a $24 Bitcoin. But I'm willing to eat my shoes if it does happen, because I'll be very happy, because I know what other assets will do if Cardano does that. Now, let's look at some other statistics, some interesting things, some more dashboards. And a shout out to DJ, who helps maintain this for us. This is all real life data. We like to look at a lot of different ratios to find outliers, because we're talking about things that are in the money and out of the money, things that are frothy or maybe undervalued versus overvalued. So the first stat we're going to look at today is the market cap divided by daily active users. It's a key ratio I like to look at all the time. And the winner is Flow, but it's not really a winner. It's actually a loser. It is nearly $1 million of market cap for every user on Flow. To me, in my mind, that is extremely overvalued. Second place is Stacks, nearly 800,000 in market cap per daily active user. Third is Polkadot, 710,000. Hedera, 300,000 per daily active user is fourth. And Cardano at $221,000 of market cap per daily active user. Again, these are very, very high. Let's drill into Flow and see what it looks like on our new ATR. Coming soon, and you can see here, just to give you the perspective of where it's come from. And we are adding new signals and backtests to this particular model. And it's really going to be designed for people that trade. If you're only looking at the markets once a week, you can identify opportunities using this type of time frame, especially for people that are working all during the day, or they're at sea, or have jobs where they can't be sitting at a desk trading. This is for you. It's also designed to tell if things are dead or alive. We have a new thing called a RECA score. We'll talk more about that in the future, what that actually means. But you can see here that Flow is bouncing off the floor. And that's what I used to call a zombie, but that was a bit offensive to many, so we changed it to RECA. We'll talk more about that as well soon. But here you can see Flow is desperately overvalued from many different perspectives. And the performance of the actual token reflects that as well. Let's look at a couple of other statistics. This is market cap over daily transactions. Polkadot wins 648,000. Remember, when you win, you're actually the worst. So that is a lot of market cap per transaction. $648,000 per transaction is nuts. Second place is Cardano, 159,000 per daily transaction. And third is Stacks, 134,000 per daily transaction. So you don't want to necessarily, if you look at traditional ways of measuring things, the way I used to measure things like Google and Facebook and stuff for the last 15 years, 20 years, I use the same principles and I'm applying them to crypto. I could be wrong, but I like this way of doing things. Let's look at developers. I always say follow the developers, follow the money, the two key things. You see there, Caspa has $544 million worth of market cap per developer. That developer is incredible to generate such value. Tron, $236 million of market cap per developer. And Binance, $51 million per developer. So again, those chains aren't very heavy on the dev side. Therefore, maybe what they're creating isn't magical, because it's unlikely one person or very few developers can create something that is market leading. And finally, TVL, this is Cosmos, $3,462 of market cap for every dollar of TVL locked. Not good. Flow is number second here, about $111. But again, another interesting metric to look at. You want these things to be low as possible. I just want to share some of those names right now. Now, I'm going to switch gears real quick, and then I'll let you guys go. I'm going to talk about Tesla. We had two interesting surprises, and I know Tesla's so beaten down. and it's delicious. I just hope it can stay down so we can stack a little bit more, because at $209, $212, it's crazy inexpensive. But let me share one thing, and I'm working on a video of how to value disruption. Crypto is disruption. We just went through a whole bunch of cases here as to how you can value it, but also how to value Tesla. And up until yesterday, they had 8 lines of business as far as I was concerned. They just added a 9th, but I'm going to talk about one of the lines of business. And Elon himself did say a couple of years ago that the energy business one day would be bigger than the automobile business. People think of them as a car company. That's changing very quickly. So I ran some numbers. So this is the energy metrics as of today. They do annualized about 2.083 billion in revenue. The margin is 25%. It's actually 24, but I just rounded up for simplicity. Number of shares, 3.49 billion shares. That's an earnings per share of 15 cents. With the growth rate that they have, the price to earnings ratio of that should be 60. Therefore, the energy megapack business contributes $9 to the stock price. But what's interesting is they are scaling up their megapack gigafactories. They're building one in China as we speak. In addition, they have a thing called AutoBidder. The margins on that will be 100%. And the profit on this stuff is insane. And the other thing is the demand for these megapacks is out 3 years. They don't have any sales or marketing. It's just customers line up. And these customers are places like, a huge place in Australia. I can't remember the actual county. You got the UK, you got Arizona, you got California, where I could have done with one of these today because I got stuck with no power. And that shows you how important this is. But if you forecast this forward, the revenue numbers and out to 2028 with a CAGR of 50, 40, 60%, it goes down over time. That will take you to an amount of EPS of $2.82 in the year 2028. And that at a PE of 60 would mean the value of the stock based on just the megapack business alone is $169. And you can buy the stock for $200 today. So the way stock valuation works, it's based on the future expected price of the asset. You pay it forward. Already, just the megapack business alone, fast forward to 2028, 5 years away, you're there. It's the whole value of the company. And we're not even talking about FSD or bots or cars or any of the other good stuff. But there's more. And this is what's crazy. I'm going to work on a new valuation model where you guys can configure it yourself and make your own assumptions, and it'll have the 9 lines of business. This is the new ninth line of business. And again, like Bitcoin, I'm also obsessed with Tesla. But guess what? BP, which is British Petroleum in the United States, they have petrol stations, gas stations, fueling stations, whatever you want to call them. They're pivoting hard, and they're clever. They're the first oil company to do this. And they already just bought $100 million worth of Tesla fast chargers, version 4, to start building out their electric gas stations. They've allocated $1 billion. That's the first slice. All of a sudden, a petrol company, gas company, is buying superchargers from Tesla. Tesla didn't even expect this. They never even thought about it. It's like companies just coming to them and say, hey, give me $100 million of chargers, going to build our own infrastructure to offset the loss they'll make on gas stations, because things are moving very, very fast. And you know what's going to happen next? The Exxons of the world and the Chevrons and all the other petrol companies will come and do the same thing. And that's interesting. That's going to be the 9th line of business. So with that, everybody, sorry for keeping you late. Been a long day for me, but I always promise you one video a day. And thank you all for coming, everybody. Hope everybody's well. And the next 2 years will be bonkers. Don't let this short-term weakness in the markets and strength in the markets shake you out. Just hold tight. Wear your seatbelt. Thank you, everybody. See you all tomorrow morning. Bye-bye.